It is Friday, June 13th, 2026, exactly 1 year since the strikes lit this conflict on a U.S.-Iran peace memo signed in Geneva by Sunday. Markets closed Friday, June 12, 2026. Here is where everything ended the week. Like and subscribe for daily market updates. Today's agenda: the weekend deal, market snapshot, Fed meeting watch, geopolitical status, commodities and crypto, earnings and IPO spotlight. Now let's look at how stocks performed before this news arrived. Welcome back to Market Pulse Daily. We are recording this on Saturday morning after a busy Friday session that left investors holding their breath for news from Geneva. The single biggest story driving global stocks right now is the potential end of fighting between the United States and Iran. Reports coming out late Friday suggested that both sides have agreed on terms, with a signing ceremony expected to happen as soon as Sunday in Switzerland. This would be huge because it means sanctions could lift quickly, allowing oil prices to drop from their current high levels near $84 per barrel back down towards $75. When the price of crude falls like this, companies that use fuel for shipping and manufacturing see a direct boost to their profits. But there is a catch here. President Trump has publicly denied some details about what was agreed upon in private talks. He called Iranian negotiators dishonorable while U.S. forces were still shooting down drones near the Strait of Hormuz earlier this weekend. This creates uncertainty because if the deal falls apart on Sunday night, oil prices could spike again above $95 instantly. That kind of sudden jump would hurt airline stocks and energy companies that rely on stable pricing. Investors are watching closely to see if Vice President Vance can confirm a signature before markets reopen Monday morning. Now let's see what the central bank is watching in their next meeting. Let's take a quick look at where the major indexes stood when trading ended on Friday, June 12th. The S&P 500 managed to recover from a scary sell-off earlier in the week and closed with a modest gain of 1.2% at 7,394 points. This recovery was led by small-cap stocks known as the Russell 200, which jumped over 0.8% on Friday alone, because investors felt safer about global stability after peace talks began. The Nasdaq also bounced back strongly from last week's big decline in technology shares, but still has some work to do before it hits its previous highs again. Meanwhile, the Dow Jones Industrial Average finished at 50,867 points, showing that even large blue-chip companies are benefiting from lower energy costs and reduced fear of war. Looking outside stocks, gold prices climbed sharply on Friday morning as traders sought a safe place to store wealth while waiting for news about Iran. Bitcoin also rose slightly after President Trump claimed the fighting had ended, though crypto investors know these moves can be fragile if new conflict reports appear later in the weekend. The dollar index weakened against other currencies because global risk appetite improved when peace talks seemed real. Now let's examine how global politics could change oil prices this weekend. The Federal Reserve will hold its next important policy decision on Monday and Tuesday of this week. This is Kevin Warsh's first meeting as chair after he took office last month, so everyone wants to hear his tone carefully. Right now, most investors expect the bank to keep interest rates unchanged at between 3.50% and 3.75% for another round or two. But there are serious reasons why they might change their mind soon. Inflation data released earlier this week showed that energy prices jumped sharply, pushing overall inflation higher than expected again. The core measure of rising costs, excluding food and fuel, also climbed more than analysts predicted, which means the underlying economy is still getting hotter rather than cooling down smoothly. If peace talks fail over the weekend and oil prices spike back above $90 per barrel, this could force the Fed to raise rates instead of cutting them later in 2026 or even beyond that year. That would be bad news for home buyers trying to get mortgages because borrowing costs would go up immediately. Now let's see how commodities like gold and oil are reacting to this news cycle. Global political tensions are the main reason why stock markets have been so nervous lately. The conflict between Iran and its neighbors has kept oil prices high because any disruption to shipping lanes through the Strait of Hormuz would cause immediate shortages worldwide. On Friday, Pakistani Prime Minister Sharif said that a final agreement had been reached after months of difficult negotiations. This document is sometimes called the Islamabad Declaration because it was drafted there before being taken to Geneva for signing. If this deal goes through as planned on Sunday night, Iran agrees never to build nuclear weapons again and allows international inspectors back into their facilities quickly. That would remove a major threat from global markets overnight. However, President Trump has already cast doubt on whether the terms are fair by calling Iranian negotiators dishonest during interviews late Friday evening. He also admitted that U.S. forces shot down drones flying near Iran's borders earlier this weekend, while claiming traffic through Hormuz remained open, despite recent attacks on Indian cargo ships off Oman coastlines. Now let's look at two major companies that dominated headlines this week, including one historic IPO. Gold prices have climbed steadily over the past few weeks as investors look for a safe place to store wealth while global tensions remain high. Right now, gold is trading near $4,213 per ounce, which is well above where it started this year, even though some analysts recently lowered their price targets slightly because they think inflation might cool down faster than expected if peace holds true soon enough. Silver followed a similar pattern, but also benefits from industrial demand, since many electronics manufacturers need silver for making chips and solar panels right now. Bitcoin moved up about 3.4% on Friday morning after President Trump announced that the fighting had ended temporarily, though crypto investors know these moves can be fragile if new conflict reports appear later in the weekend or during Monday's trading session when markets reopen fully again. Finally, let's wrap up with what matters most for your portfolio heading into Monday. Two major stories stood out during Friday's trading session besides the Iran peace talks. First was SpaceX launching its biggest initial public offering ever on Thursday night, when it priced shares at $135 each before opening higher than expected and closing near $161 per share after a massive first-day rally that saw investors buying aggressively into what many call history's largest stock debut. The company raised $75 billion total from this offering alone, giving it a market value of roughly $1.75 trillion based on how much money shareholders paid for those new shares during the initial sale process itself, which generated huge excitement among retail and institutional buyers alike who wanted to own part of Elon Musk's space ambitions directly through public ownership structures designed specifically for launching satellites globally. As we close out this Saturday briefing, the market mood is cautious optimism because small caps and energy led Friday's gains while tech recovered from last week's decline but hasn't fully reclaimed all losses yet. The single biggest risk remains whether a peace memo gets signed in Geneva by Sunday night, or if Trump's denial of terms causes the deal to collapse completely overnight, which would send oil prices back above $95 instantly and force yields higher again, just as Kevin Warsh prepares for his first Fed meeting Monday morning, facing potential rate hike debates against hottest core PPI since 2022. Investors should watch confirmation or denial before Asian markets open Sunday night, because that will define Monday's opening levels across all major asset classes, including stocks, bonds, and commodities alike. Thanks for watching Market Pulse Daily.